Welcome back. You're watching Market Fatatfat right here on ET now, and this is the show where we get you all the stocks buzzing based on news flow as well as on technicals. Talking about technicals, now we have Nirav Chheda joining us on the show. Very good afternoon to you, Nirav. And before I can come to you for your stock, let me talk about the life insurance space as a whole. All of them are a buzz in today's trading session. And why is that? Because CLSA has come out with a positive note on the life insurance space where they've upgraded the life insurance stocks. They believe that the negatives are priced in due to the changes in the budget, and they're saying the Indian life insurers have corrected between 7 to 24% since budget. They're also noting the fact that current valuations only factor 0 to 4% growth. Retail projection is returning to the growth mode, also protection, I beg your pardon. They're also saying that H1 FY24 to be impacted due to the pre-buying in the month of Feb as well as March. The changes in LTCG could increase fair value for the life insurers by 9 to 16%. They have gone ahead and upgraded SBI Life from outperform to buy. They've set a target of around 1,325 rupees per share, which is an upside of about 21% from the previous target. They've upgraded HDFC Life to underperform from sell. Target is at 500. Upgraded Max Financial from underperform to buy with a target of 780. And they've maintained an outperform stance on ICICI Prudential with a target of 485. So all of these counters are a buzz. Add to this list also you have Max Financial that's trading higher by about 4% as we speak.
Okay, there you have it. That entire sector is active in trade. And let's pick out one of those names, Nirav, because one of them is what you're bullish on. That's HDFC Life. In the last 1 year, it's been confined to a very tight range. So what is it that you're expecting on HDFC Life on the charts?
Hi everyone, and yes, I am very bullish too on this life insurance space. I have two stocks today, HDFC Life and SBI. HDFC Life, the pattern that it has made, it shows that it has finished its downward journey. It is a good base formation that it is making. Good volumes are being seen at the lower end. And a very good reversal is in place as well. I believe this reversal will play out for the stock, and it can go up towards that 600, 620 odd levels, which is where it had fallen in the time of the budget. So most likely, this is the time to buy. Go ahead and buy with a stop loss of around 475 on a closing basis. You can get very decent gains in this stock and in the sector as a whole. Most of the stocks have bottomed out.
Okay, Nirav, HDFC Life. Then let's talk about the second one as well. That is SBI Life as well that you've picked out for us. And obviously you're bullish on it. What are the targets that you're keeping an eye on? And similar chart patterns to HDFC Life then?
Not very similar to HDFC Life. See, HDFC Life, ever since it made that high of 730 odd, it is coming down slowly and steadily. But this stock, SBI Life, this stock is in consolidation. So it also made a new high just about 3-4 months back, and then again started to fall. But I believe this stock has reached its lower band of consolidation, which was around that 1060 levels. Overall trend still continues to remain bullish in SBI Life, unlike HDFC Life. So this will be a much better stock in the longer term, compared to HDFC Life. I believe this stock has the legs to move up towards that 1250, 1300 levels in the near term, and in the long term, probably 1800 to 2000 can come in. But most definitely, from current levels, it should be bought. The stop loss for the same should be around 1080, and that 1250, 1300 range is where you book profits in near term.
All right, so that's the take coming in on SBI Life. But Harsh, let's talk about SBI then.
Well, yes, there's in fact Motilal Oswal who's met up with the management of SBI. What they believe, or rather what the management of SBI has actually told them, is that there's no real risk to the banking sector. But with regard to growth, they're expecting growth to come off from some of those high 16-17% is what the credit growth was looking like. The SBI management expects that to come off to the 14 to 16% band going into FY24. Also, with regard to their margins, they're quite bullish on their margins because they believe the MCLR re-rating is yet to happen. So you can expect margins to get better for SBI going forward, and that's a big positive. credit quality continues to remain solid and credit costs continue to remain benign, and SBI expects that to continue in FY24 as well. They do not expect challenges, and they expect granular recoveries going forward. Yono continues to open 30,000 plus savings bank accounts. That's a big positive, and also cost ratios continue to moderate on the back of the digital push. So they're expecting a 1% ROE, 15% ROE, 1% ROA going into FY24, and they seem quite confident about that.
Okay, keep an eye out on SBI. Let's move on, talk about Sonata Software. This one is in focus as well. And the company's share price, actually, you look at it today, it gained as much as more than 2% in trade. As of now, given up those gains, but nonetheless, 1% up as of now as well. The company has actually signed the biggest ever contract worth $160 million for a period of 10 years. And this is with a US-based consumer retailer now. Sonata Software will be managing the end-to-end IT modernization and transformation for the clients, as well as, do not forget, earlier this month also the company's wholly owned subsidiary Sonata Software North America Inc. had also completed the acquisition of Quant System Inc. and its subsidiaries as well. So keeping an eye out on Sonata Software today, it's up 1.25%.
Let's move on then, and stock number 23 is going to be Samvardhan Motherson. It's in the spotlight in today's trading session, as yesterday post-market hours the news came out that Motherson International Limited that has acquired the remaining 50% stake. This is of Fritz Zimmer Motherson Cabin Engineering Private Limited, which is a holding company of theirs in Austria. So watch out for Samvardhan Motherson. Pretty flat around the 65 mark in trade today.
All right, moving on. Lisa, Pidilite is the stock that you are tracking for us. And what's the news flow surrounding this one?
Yes, JP Morgan has come out with a report on the stock, and they have maintained an underweight at a target price of 2,150 per share. So that gives a downside of around 10% from the current market price. They say that the company is augmenting efforts to drive its top line, and the margin recovery that has been factored in the earnings as well as valuations. They say that though the demand trends are steady, however, rural demand that is yet to catch up, and they have flagged off the current valuation, saying that it's expensive at 65 times of FY24 and 55 times of FY25 earnings. Well, the specialty chemical player, it has fallen like around 20% from its September highs, and today it gained like around 1% in early morning trade, and hitting a high price of around 2,398. But since then it has cooled off, and but still it's trading with a positive bias.
Okay, let's keep an eye out on Pidilite. Let's move on and talk about SRF. Nirav, how is this one looking like on the charts? Yes, in the last 6 months and 1 year, when you look at it, not done much, but last 1 month surely seems like it's picked up a bit of pace. Is that a turnaround for the stock, and can we expect a sharper rally now?
Yeah, so fair observation here for SRF. Last 1 year it hasn't really done anything. It's been in a range of about 2,000 on the downside and about 2,700 on the upside. I believe this stock at current levels has given a breakout. It has touched its lower band, and now it is moving towards its upper band, which is still significantly higher, about 10% higher. So it can move up towards the 2650, 2700 levels. It has also given a breakout above its 50 and 200-day moving average, in today's trading session. So I would like to buy the stock at current levels. The stop loss for the same should be around 2300 levels, and on the upside around 2600, 2650 is where you book profits.
All right, moving on. Harsh, Mahindra Mahindra, this one is in focus in today's trading session, a news flow that actually hit the bourses this morning.
Well, yes, Cheryl, we're looking at IFC looking to pick up around a 10% stake in the new last mile mobility co that M&M have. It's a 600 crore investment which IFC is looking at, valuing the company at around 6,020 crore. Also, the investment is going to be done in the form of compulsorily convertible instruments, and it will result in an ownership of roughly 10 to 13% for IFC in this new company. This is, of course, IFC's first investment in an EV manufacturer in the country, and IFC's first investment in electric three-wheelers globally. So that's a big one. And with regard to the funding, of course, it's going to help India's last mile mobility, and it's going to boost penetration of electric three-wheelers. So on the back of that, quite encouraging in terms of news. The stock was buzzing in early trade, but it's given up some of those gains as of now.
All right, let's track the technicals then of that newsmaker and find out what exactly M&M looks like on the charts. Nirav, what's the view?
Very good actually. See, this stock had witnessed the best rally any stock has seen, any large cap has seen in the last 1 year or so. But recently it has broken down below a very important support level, which was 1200. It was a very good consolidation which was going on, but it was suddenly broken with good volumes. Also, a lot of shorts are seen in the system. I believe this stock can go lower further. It can probably now go towards its earlier support, which was around that 1100 1080 levels, and make a base there, and then again look to witness some buying there. But till then, this stock will be under some selling pressure. So if you're holding longs, exit longs and wait for those levels to come in lower side, and from there you can make new buying positions.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more stocks after this break. Welcome back, and you're watching Market Fatatfat on ET now. Let's keep it going with all the stocks that are buzzing in trade. And we have Emami that is in focus. It's seeing an uptick of as much as 6 to 7% in trade after it is said that the board of the directors will be meeting on 24th of March, and they will be considering a proposal of a buyback. On the back of this news, so we have seen that the stock is buzzing, and the primary objective of the share buyback program is obviously going to be in terms of to arrest the fall in the value of the stocks by reducing the supply of the stock as well, which essentially will push up the prices, and maybe a better PE multiple also is what we could watch out for as well. Today the stock is gaining as much as 6.32% in trade as of now, and do not forget, the stock has been one of those underperformers as well for the longest period of time. Finally, a very good up move that we've seen coming in, and one of the best moves that we've seen coming in for Emami since in November, so keep an eye out on that one.
All right, just let's put a spotlight on what NBCC is doing right now, because you had a flash that came bottom of the screen that NBCC has bagged an order worth about 478 crore rupees, and post that particular order win and the announcement, you can see the stock has actually risen in trade. It has erased all of its losses, and right now trading higher by about 1%.
Let's move on then and discuss Power Finance Corp, or PFC, as the company has given its approval. This is for a fundraise to raise funds to the tune of 80,000 crores. This is for FY24. The company plans to borrow 80,000 crores in fiscal year, excluding funds earned from extra budgetary resources, and that has been accepted by the board. PFC's board has approved up to 80,000 crores, the long-term domestic borrowing at 40,000 crores, the long-term foreign currency borrowings through ECB is 20,000, short-term borrowing about 10,000, and commercial paper about 10,000 crore rupees. That's the stock price of PFC around the 154 mark, pretty flat today in trade.
All right, let's put the spotlight on the entire banking space, and you have Morgan Stanley that has come out with a note on the banking space, saying that the tighter regulations have lent a strength to Indian lenders' balance sheet, this amid the global macro challenges. They're also saying that domestic banks are much stronger than historically in capital, asset quality and liquidity terms. They're also expecting strong earnings resilience from the banking sector, and they're preferring ICICI Bank as well as Axis Bank. They are the top picks. They cited that the risk reward is pretty attractive for both of these counters. They've also recommended adding to positions in ICICI and Axis amid the current volatility. What Morgan Stanley is saying, and I quote, that large private banks such as Mahindra Bank also stands out on balance sheet strength. They're also saying margin of safety and the extent of potential bad loans that banks can absorb remains strong and has significantly improved to 5 to 25% for the private banks. They're also saying the improvement in margin of safety due to the significant capital raising post-COVID-19 pandemic period, the lower dividend payouts, as well as strong earnings. They are also highlighting that the PSU as well as private banks have significantly improved coverage on impaired loans over the past 2 years, and therefore they're giving a thumbs up to the entire banking space as Morgan Stanley, ICICI Bank, Axis Bank, their top pick, can look at Kotak Mahindra Bank as well.
They're keeping an eye out on that bank. But Nirav, you've picked out one bank specifically, that is ICICI Bank. Morgan Stanley is positive on this one. They've given it a thumbs up. Are you giving this one a thumbs up as well? And is it the right time to actually enter ICICI Bank then?
I do believe so. See, I believe this is one of the strongest banks in the whole banking space. Even though Nifty fell so much, you haven't seen a bigger cut in ICICI Bank. In fact, it has always given good support area, to Nifty whenever it falls. I believe this stock has witnessed a good breakout above that 50 and 200-day moving average. Both breakouts have come in today only. This breakout is here to stay. I believe it can go up now towards that 880, 900 odd levels. So I'd look to buy the stock at current levels. 840 should be the stop loss, and about 880, 900 is where I'll be booking profits for the near term.
All right, let's get a move on then. And at number 30, discuss Manappuram Finance. Harsh, a newsmaker today. Why is that?
Well, yes, the management held an analyst meet and they've guided for a loan growth of 20% and an ROE of 20% in FY24. And that they believe is going to be driven largely by the non-loan gold business. What they're also suggesting is that the standalone gold loan business book is expected to grow 6 to 8% in FY24 and 10 to 12% in FY25. So a tepid growth there. Gold loan yields currently are between the 21 to 22% band, and they also suggest that gold loan actually in terms of growth hasn't really picked up very well. 6 to 8% is the FY24 number they're looking at. VP Nandkumar, whose term ends in April of 2024, will be seeking an extension. So that's one positive, and they don't have any intention to sell Ashirvad Microfinance either. They're looking at fresh equity infusion from financial investors. This is all coming from the analyst day meet, of course, and on the back of that, you can see the stock is up and buzzing 2.5% higher in trade today.
All right, so that is what's happening with Manappuram Finance. Why is this one moving in trade today based on news flow? But Nirav, talking about Manappuram Finance on the charts, do you think it will continue to glitter and shine going ahead?
Yes, most likely. See, again, one of the few stocks which is making a higher top, higher bottom formation in the near term since the last 3-4 months. This stock has been, taking good support around that 100 level ever since, it comes to 100, you witness a good bounce and then, a good reversal. So the reversal is in place. Now it is gunning for its previous high, which was around 127, 128 odd. It is likely to break it and move towards that 135, 140 band. So I believe one should be buying this stock for that target of 135, 140. And, this stock again is above its 50-day moving average, which it broke just yesterday. So, again, a positive indicator there. Keep a stop loss around 114 for your longs.
All right, watch out for Manappuram Finance. But let's get a move on then and discuss Bharti Airtel in greater detail. Lisa?
Stanley is out with a report on Bharti Airtel, and this is on the back of Bharti Airtel's new postpaid family pack plan. Let me remind you that on Monday, Bharti Airtel, it lowered the entry-level tariff for its family plans, and this is for the postpaid services. Well, they launched a 599 postpaid plan, and they have also bundled in the OTT services of Amazon Prime, Disney, Hotstar, as well as Airtel Xtreme. Well, it looks like they're stepping up on the competition and giving out these lucrative offerings. So what Morgan Stanley is saying, that this fills in the void in the market for lower number of add-on connection. Well, with a family of 2, the data requirement will be lower. So they are filling in that market space. So they say that this plan is not as competitive as Jio's new postpaid plans, and the plan is also accretive to the ARPU, which is compared to the other existing family plans of Bharti Airtel. Well, Morgan Stanley has an overweight on this stock at a target price of around 860 per share.
Keeping an eye out on Bharti Airtel. But Nirav, on the charts, TCS, how is this one looking like? what is the upside left now? Expected, not left. When is it going to start showing that upside?
The chart is not looking very good, Vinny. So this stock can come down further. I believe a very important resistance was hit around 3600 levels, which was the breakdown area. So that got retested, and from there the stock continues to come down. So already 500 points down, but it can come down further from current levels. I believe it can come down towards the 2950, 2900 levels. So look to short it here. Don't be in a hurry to buy because lower levels are coming. A very similar chart to Infosys as well. So both these counters are not looking very good at this point of time.
That's the view coming in on TCS. But let's move on to an ET Now exclusive then. Hotels and restaurants may soon get relief on GST. ET Now has learned from sources the Finance Ministry is considering their demand to increase the GST to 12% so that they can get the benefits of input tax credit. My colleague Prakash is here with all the details. Prakash, over to you.
Yes, hotel and restaurant industry may get relief under a GST very soon. Sources are informing that the Finance Ministry is actively considering the proposal that has been sent by the hotel and restaurant industry to provide relief in current GST structure. Sources are informing that a GST on hotel and restaurant may be increased to 12% from existing 5% with input tax credit benefit. Industry has been demanding a government to change in current GST structure in order to provide relief, considering their increased input cost. Apart from that, industry has also cited, location-based differences to meet their case. So, considering that Finance Ministry has sent their proposal to the Fitment Committee of the GST Council, and it is expected that the GST Council may consider this proposal in the next meeting. However, hotel restaurant where the room tariff is above 7,500 rupees attract 18% GST, and in line with that, the current structure may be changed.
Thanks very much, Prakash, for giving us all of those details. On that note, then, we'll wind it down right here on this edition of Market Fatafat. Thanks for watching.